So the crypto markets are dipping, but what is the reason behind the dip? And should we be buying the dip right now? Let's take a look at all of this in today's video and provide some context behind the movements in the market. So if you enjoyed today's content, please subscribe to the channel, turn on those post notifications, and join our Patreon link down below for more content. Now the crypto market cap is down roughly 8% today, and if we just go over the biggest gainers over the last 24 hours, the majority of them are of course stable coins. 1, 2, 3, 4, 5, 6, 7, 8, 9 out of the top 11 here. So it looks like the best place to be part right now would have been the US dollar. Now September is historically a very bad month for crypto. It seems to always take a dip around this time. So with your portfolio down today, it might be a bit of a bitter pill to swallow. However, there is light at the end of the tunnel. I think this is a major whale shakeout before we move to higher highs. So let's look at some historic context here. This is a fractal from 2013, which is showing some eerie similarities to the 2021 cycle here. April 2013, we peaked out for the first of the double bubble. Again, we peaked out this year in April at around 64K. Then the second peak of this cycle came around December of 2013, a total of 8 months apart from both of these peaks. And if we look at the chart more closely here, you can see that there was a dip around July, a major drop just like we saw in mid-July of this year. And then we had a nice price rise. Everything was back on track until we hit around September before one final shakeout here, which actually came in the first week of October in 2013. And this was that final shakeout before a parabolic advance that saw Bitcoin move from around $200 all the way up to $1,150. And if we look at that in the context of the previous cycles as well, so that's 2013 that we just looked at. A lot of confluence here. We have a peak, big drop in July, and a shakeout around September, October. 2017, we had a peak up here around $3,000, a big drop in July, a recovery at the end of summer, one final drop, and then a parabolic advance. And it looks very similar to what's going on this year. And as they say, history doesn't often repeat itself, but it does rhyme. So looking at this context, it seems that we are in a similar position, and any major dip right now is going to be that final dip before we have a parabolic advance. A lot of people are speculating that this next advance lasts pretty much the final quarter of the year, and that will be game over. The bull run will peak out, and this seems to be a common conception around the market right now with many YouTubers talking about this. I don't for sure prescribe myself to that way of thinking as well, as I see this cycle actually extending a lot longer, but this of course will be impacted by macroeconomic factors, and those are definitely the talk of the town right now as well. But just checking in here on the fear and greed index, you can see we're currently neutral, and if I was a betting man, I would tell you that this will be in an area of fear by tomorrow when this updates in around 6 hours. Now, are these whale games that are suppressing the price before we have these parabolic advances? Do these guys know a lot more than us? And are they privy to some top intel that us mere retail folk don't have access to? Well, this is something that was surmised by Elio Trades here earlier this week. And funnily enough, and quite ironically, this had his lowest view count of the week, but I think this was an alpha packed episode here where he was giving his opinions straight from the hip here, shooting on his rooftop. Let's just jump in here and see what he has to say, because listening to this, I think he sums up exactly what is happening right now, that we're going to see a coordinated final shakeout to get retail to sell their coins up before the whales really cash in here, scoop up all that cheap crypto, and make off like bandits before a final parabolic run.
So there's a lot going on. I certainly think that the regulation stuff is going to get worked out, and I'm personally very bullish that we'll get an ETF approval in October. Now, of course, we've been rubbed on that consistently for years, so I could be wrong, but if that happens, Q4 is going to be the most ridiculous quarter, so hold tight and don't let these whale games fool you, because especially if we are going to get an ETF filing that is approved, and the whales know about that, believe me, they'll know about it before you do. They'll try to fund people out. They'll try to do one last shakeout. They'll try to have some kind of flash crash between now and then. So understanding that is key to survival here. I'm going to hodl super tight.
So the key message in that video is that if an ETF is coming for Bitcoin, there's going to be a huge wall of money that many people will be aware of coming into the market. And this will send all cryptos absolutely parabolic and will send Bitcoin above that key 6-figure price target that so many people have. And the whales, those people in power, those people who have got people in the know, deep ties to probably Congress and the upper echelons of society, they're going to know before us. Us retail folk are going to be the last to understand this. And so what are they going to do? They're going to try and shake us out before that monumental decision comes through. So as Elio says, it's time to hodl tight, stick to your bags, and don't be fudded out. We're in a bull market right now, and selling could have catastrophic effects. And we've seen this over the last few days. Fidelity Investment held Bitcoin ETF talks directly with the SEC themselves. They're speaking to Gary Gensler, and then hear from Eric Balchunas. Bitcoin futures ETFs are about halfway through the 75 days it takes for SEC approval of a 40 Act fund. So here's the earliest date they could and are likely, in his opinion, to be approved based on when they filed. So all of these coming around mid to late October and the 1st of November. The likes of ProShares, Van Eck, and Galaxy Digital, amongst others here, in line for an ETF to be approved. And if this does happen, this will send us into a major parabolic move in Q4, just as Elio is predicting. So do be aware that people in power do not want average folks to get rich. And so with this kind of information on the line and potentially out there, the opportunity cost of selling your bags now whilst we're in a dip is just ridiculous. So this from Will Clemente. Almost every big brain person I know is bullish for the coming weeks, and reply guys are mostly bearish, probably means nothing. And waking up this morning, checking the timeline, Twitter was super bear. I honestly thought we were down to 30K once again, people calling for 10K, people calling for 20K Bitcoin as well. So you often want to do exactly what the opposite of the herd mentality is. And so if people are going short right now, it's probably a good time to get long. Now, Simon Dixon, he can be counted as smart money here. He runs Bank to the Future, one of the few investment firms in crypto that is fully regulated already. These guys have been doing it in the right way for over 10 years now, making sure that they are ahead of regulations. They've invested in the likes of Kraken, Celsius, and other huge companies that make up mainstays in the crypto economy here. So within this, he talks about the regulatory crackdown, and he did warn of this months earlier. He said this will be a major hurdle by the end of the year, but he says at this point, he will continue to dollar cost average into the market. He sees the macro structure as extremely bullish, and there are some big moves coming for the crypto market. And so rather than looking at random people on Twitter who are scared right now and potentially selling up, calling for 10K Bitcoin, you need to see what the smart money is doing. These guys are doubling down and DCAing in at these prices. In a bull market, you want to be buying the red days and selling the green, not the opposite way around. And in terms of the SEC, the crypto lending markets, he's got a big say on this as he was an early investor in Celsius. And we have seen Coinbase actually officially bend the knee on their plans for their crypto lending product that they were going to offer around 4% on stable coins. So you can see that the SEC, with their notice that they were going to sue Coinbase, has actually worked. Coinbase bending the knee here, not putting up much of a fight. And this is what they had to say here. It says, as we continue our work to seek regulatory clarity for the crypto industry as a whole, we've made the difficult decision not to launch the USDC APY program announced below. We have also discontinued the waitlist for this program as we turn our work to what comes next. So the big banks have obviously been able to sway the regulators in their favor as they typically do, applied enough pressure, and now Coinbase will not be offering this program. And we've also seen the likes of Celsius being issued with cease and desist orders. And so crypto lending is the first major area of DeFi that the regulators are going after here. Now, in terms of how long will this take for things to be resolved, this timeline could run into years. We're seeing with the likes of Ripple, that case has been going on for years now. And so I don't expect a quick resolution from this. But again, this is adding to the FUD, the fear, the uncertainty, and the doubt in the market, which is all accumulating in a big dip right here. And it seems very well orchestrated and timed that all of these things are coming together and hitting your timeline in one big go. But on the bright side, Celsius reward payments were paid as usual this Monday. I received mine along with thousands, if not millions, of other customers. So as we check on the price quickly here, we can see we're sat at around 43,700, and this is an area of support that I have on my radar here. If we break this, we're probably moving down to the very low 40s here, which we don't really want to see. But as you will notice, the market makers have spiked the price just below this. Earlier today, this will induce people to go short on the market, and thus the market maker makes a healthy return. I don't believe at this point we're going to go below this, but we'll have to monitor this as the week comes. But this for me is a key level of support we need to be holding. But a break below this will actually see some extremely discounted prices across the altcoin market. So today I have not deployed any fresh capital, but I will do if we break below this, as I think this could be a generational opportunity to scoop up some very cheap coins. So of course, let's talk about BitBoy real quick, because this guy was predicting that the peak of the bull market will come approximately within the next 3 weeks, which seems almost fantasy-like from this position. Been around 4,700 bucks. He still predicts will be well over 100K by the end of the cycle. And I think it seems very unlikely that we're going to go and do maybe a 3x on Bitcoin in the space of a 3-week period here. So on this point, I would say take anything this guy says with a very large pinch of salt. As you can see from some of these titles here, he's calling for 350K Bitcoin, then a jump to 42K. Just a few hours between each other here. So again, this is just a guy on the internet, just like me, talking about cryptocurrency. And so don't go basing your financial decisions off what anyone else has to say. Do your own research, have a think about where you think the market is going to be heading in the long term, and position yourself accordingly. He did then post this as well. So after calling for a top in October, he goes on to say that a grayscale ETF will probably come first, and this seems likely in November. So keep an eye out for that. But of course, if we have an ETF, the peak will come after that point. This is when big institutions will absolutely pile into Bitcoin, and you will see a huge green candle on the chart. Then a big day for the calendar is tomorrow. So on Tuesday, Federal Reserve officials meet again to talk about post-pandemic stimulus, i.e. this is all the tapering talk that you may see on your timeline. So it says the policy setting Fed committee convenes on Tuesday for a 2-day meeting. So whether we'll actually have any announcements today, or we're going to probably be waiting till Thursday, I would expect, is more likely. But we should have some clarity as to whether tapering will start sooner or later, or whether they will push this back further and keep kicking the can down the road. The details will be accompanied by a fresh set of projections for growth, unemployment and inflation, and most importantly, individual expectations for when interest rates may begin to rise from today's near zero levels. Previously, Jay Powell has talked about tapering coming in if it's appropriate towards the end of the year. But of course, with the talks around China that have now taken the headlines by storm, we're seeing a bit of uncertainty in the stock markets. And as you can see from here, the Dow, the Nasdaq and the S&P are all down quite considerably for them today, almost around 2.5 to 3% apiece. And from Ranua's post earlier, he said this: all eyes on the USA stock market today, long-term trend is now broken. So with a weakening stock market, I can't really imagine the Fed coming out and saying, we're going to start tapering ASAP. Time to, take the belts and braces approach and tighten this ship back up. I think they're more likely to extend, or at least be a lot more dovish in their behavior towards this, because you don't want to be adding additional uncertainty whilst the stock market isn't looking the most healthy it has done, and whilst people are getting that PTSD around the 2008 financial crisis, which of course was started off with major defaults in the housing sector. And that is exactly what's happening here with Evergrande over in China, which is now taking most of the headlines around the business and finance world. So having just gone through 18 months odd of COVID and a lot of stimulus has taken place, if it looks like we're on rocky terrain for financial markets right now, I can't see any government not wanting to additionally step in again and print more money to get us out of these potential problems. So for me personally, I think that tapering is likely to be delayed. I think there will be more positives to come out of the Fed meeting. And again, we will see more money printing, as this is essentially the crack that is keeping this system running right now. So Evergrande, now the story of the week. And you can see here the humor of Twitter. Just found out Evergrande's property portfolio is in China and not in the metaverse. So of course, if it was in the metaverse, it would be at all-time highs at this point. But it is of course worth keeping tabs on the wider economic picture, as if things do start to turn south, we are very much on borrowed time. So an ear will be kept to the ground for all that. But we do have reasons to be bullish on the crypto markets, of course, and especially to be optimistic on them, with optimistic roll-ups coming very soon. So one-click optimism will come in October. So this is genuine ETH L2 scaling, and this person says these L2 scaling solutions will be a face melter by the end of the year, just getting started. And he's predicting 1000x efficiency gains. I think that's a little bit overboard, but we are going to see some mass efficiency gains for ETH on L2. And this doesn't compromise any of the security model of Ethereum, and it's going to be lower fees for end users. And essentially this can help with the bull market. Retail was being priced out of using Ethereum. It's where the majority of dApps now exist, and so we want them to be usable. We don't want to see gas prices of 200, 300, 400 every time that there is an NFT mint on ETH. So this coming in October will definitely be a bullish sign. And there's stats to back up the bull case here for Ethereum. This is definitely the bellwether of the crypto market and essentially the altcoin market specifically. Now, a record $1.2 billion worth of ETH left centralized exchanges just yesterday, but this was posted on the 16th. So on the 15th of September, this happened. This was the biggest exodus of ETH from exchanges in one single day. And this shows you the supply shock for Ethereum is coming, and it's coming quickly. And this can be applied to Bitcoin as well. Bitcoin is being scooped up by whales right now. They're adding hundreds of thousands of BTC to their portfolios. And it is the weak-handed retail investors who are actually selling their crypto. The rich are getting richer off the back of all of this. And so with a potential ETF on the cards, these supply shocks are going to have tremendous impacts on prices. And here again, the crypto and blockchain sector received nearly $2.1 billion in private investment over 100 rounds in August alone. So if it's any doubt in your mind right now, crypto is the future. This is the only market that is really worth investing all your time into. The amount of gains that can be seen in this are going to outsize any other opportunity that is out there. And the big money knows this. They're investing like mad into crypto, into solutions, and to dApps. So follow the smart money. Continue to DCA in. If we get some big opportunities this week, it is time to add. Of course, not financial advice, just telling you exactly what I'm looking at and what I'm going to be doing. I will be adding to this dip if it continues. So with the news stories being shaky all around here, from the SEC to tapering talk to China FUD, it's no real surprise that the crypto markets did take a dip today. This is, of course, the weekly open on a Monday though. So in terms of the markets, traditionally they are closed over Saturday and Sunday. So all this China FUD has probably caused a bit of a bigger impact than if it was during a midweek session. So I think it's really important to look forward to tomorrow and the few days after to see exactly how we correct around here. But in all likelihood, this is going to be a very choppy week for the crypto markets as a result. So hold onto your hats, keep DCAing in, and everything will be good in the end. Just look back at all the previous dips. This market is heading one direction and one direction only, and that is to the top right-hand corner. So I hope you've enjoyed today's episode. I hope I've calmed any nervous individuals out there, and I will catch you guys very soon in the next episode. Thank you for watching, and goodbye.